Yesterday, it was a down day. There's some rebound in the Asian markets right now.
Apart from that, market regulator SEBI has allowed small and medium REITs.
Support for the Nifty Bank then comes in at 43,567, which is the 20-day moving average.
Yesterday, they have put out that they'll be having a board meeting on Thursday, and they're going to be withdrawing the scheme of arrangement that was announced on May 22nd.
Back of this, they've raised the earnings estimate for FY24 and FY25 for all the three companies.
Here's the first take on the index. Not too bad. It is up almost 35 points.
We still believe that the visibility of growth in terms of the earnings for some of these segments are good.
See, the unsold inventory is not very high. We expect a 20% growth overall in our business, and we expect 20% growth at Palava also.
Kind of consolidation that we had last week, pretty much more of the same is how this week is kicked off as well.
Jeffrey says that it does not see a systemic risk because of this, because of the high derivative turnover growth.
So ideally we ask for 21 days, but anywhere between 30 to 40 days would be a comfort zone for us.
For the markets, it has come off slightly from the highs, 30 points higher on the Nifty as we speak.
Well, that's a day so far, and what a day it is turning out to be in the positive sense, because, I mean, indications were that it'll be flat and maybe a little directionless like last week, but it's not to be the case. The market's doing just fine. You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios. I am Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, afternoon.
Hi, afternoon. Absolutely, we thought it's completely lackluster, and suddenly there's a spike. And I was noticing this is despite European markets starting out soft, but suddenly, I mean, IT stocks were lackluster. They're bouncing. Reliance is bouncing. So next 1 hour.
Yeah, you know, if you just look at the Nifty, you pull up the 1 week chart. You know, if you put the last 8 days or so, every day we go to this level of around 19,800, 19,850. The 1 week chart of the Nifty actually should come up for you on the screen. So on a day-to-day basis, we're testing that. Now it appears we want to go towards the 19,875. And for me, the Nifty Bank is going to be the most crucial factor. Why is that? Because it's been showing that it's coming to life in the last two sessions. Today is the weekly expiry. In the next few days, it plays out the weekly expiry. Beg your pardon, not today, but the Nifty Financial Services will be playing out its expiry today. And the next chart is very important because it will pull up the 20 DMA, which has been a bit of a support for the Nifty Bank. And it'll put the 50 DMA as well should come up for you. So the Nifty Bank will come up for you with the 20 and the 50 DMA. If it can get closer to around the 50 DMA, that's going to be a crucial number. You know, 44,050, that's the mark we're looking at. At some point of time, that will come up. There it is. Yes, that's the one that we're talking about. Approaching the 50 DMA, supported at the 20 DMA, and the Nifty Financial Services Index, the last 60 minutes, it seems to be wanting to do a thing because a lot of those contracts will expire in the next 59, 60 minutes.
You know, the Nifty as well, Nigel. The rally started at about 215, 216 or so. It's a vertical rise, right?
Yes.
Look at that. Usually you get these kind of moves around 3 o'clock, the 3 p.m. move, but it's started early. The question is, will it sustain? A lot of help actually from Adani Group stocks. I mean, out of these 77 odd points that you have on the index, about 30 points are coming in from the Adani stocks. There is Adani Enterprises and Adani Ports. Between them, 30 points coming in out of the 80 that you have on your screen right now. But there is help from, I mean, names like Tata Motors, Axis Bank, Bajaj Finance, Coal India, Titan, etc. So this is not a bad-looking screen this Tuesday, especially given the circumstances, which is a pretty tepid kind of global picture so far.
No, absolutely. Not to mention that the mid-cap market is now looking even better. I mean, mid-caps were anyway outperforming large caps right from the morning. But you have lots of names now. PSUs once again are having a field day, whether it is an NBCC, which is now quoting about a 6% gain, NMDC, PNB, SJVN, Coal India, BHEL, Aircon, SAIL. It's an out-and-out PSU rally. Big day. For PSUs, looking good on the index as well. The advanced decline ratios, actually, now it's not been a very huge sort of divergence between the advances and the declines. That's a pretty neck-to-neck kind of a piece, 1:1. But overall, there are lots of movers and shakers, and we'll talk about them as we go forward. And guys, let's not forget the visuals on the right side of the screen. On the left, you're seeing the graphs and the charts. That's the big human story, and well, maybe it's coinciding with the market also moving higher. Hopefully, in the next couple of minutes or maybe hours at max, we'll have good news coming in for all those from that tunnel.
Yeah, hopefully by the end of today, by 5-6
Yes.
p.m. we have some positive news coming in with regard to that rescue plan that's going on in that tunnel. So prayers to everyone out there. A lot of efforts being taken, and hopefully we finally see a breakthrough sometime later this evening. We'll keep getting you an update on that front. But just to go back to our markets, if you pull up the Nifty and you pull up the Nifty Financial Services Index, you pull up both the two indices up for you. The Nifty Financial Services Index plays out expiry. And the move in the Nifty, has been aided by this move in certain of those Nifty Financial Services constituents as well. So both of them moved up at the same point of time. And there'll be a couple of constituents that are actually part of the Nifty Financial Services Index and not part of the Nifty. SBI Life, Bajaj Finance. They're not part of the Nifty Bank, but they're part of the Nifty Financial Services Index. And both of them have moved up. And there is some, support coming in from Reliance Industries that was trading in the red. That's moving into the green train. So that's one of the large heavyweights in there that have helped the Nifty move up as well. Let's pull up Reliance Industries. Yes, that's the one, almost moving into the green.
Throw in the IT stocks. There
Yeah.
were big drags in the morning. Look at a TCS. It's already now almost on the flat line. Ditto for Wipro as well. So basically, we've gone on for a goodish bit. The reason is the market's showing a remarkable turnaround right now. So let's get to trades then straight away, what you should be doing over the next 1 hour or so. We have Mitesh with us as always. Mitesh, good afternoon. Lots happening in the market. What are you making of it and what would the trades be?
So I think the action is kind of, being on the broader side, and now the Nifty is once again getting closer to 19,870, 875. I think important that we sustain above this level. Then I think we should see momentum to about 20,050 odd zone. So we'll stay positive in that sense. I have a buy on Container Corporation and Coal India. So Container Corporation, I recommend buying with a stop below levels of 750 for targets of 790. And Coal India as well, that's a buy with a stop below levels of 335 for targets of 355.
Okay, all right. Thanks a lot, Mitesh, for joining in and giving us that. We'll keep coming back to you as the show progresses. Well, Jubilant Food, that's all set to acquire the balance stake in DP Eurasia. Mangalam joins us to fill us in with more details. Well, Mangalam, now it appears this company will move from an associate to being a subsidiary. Tell us more about how much, they'll be garnering in terms of revenues as well as the deal value.
Well, so the announcement that came today is that Jubilant Foodworks will acquire the balance 51% stake that they hold in DP Eurasia for about 700 crore odd rupees. In euro terms, it's close to around 73 million euros itself. DP Eurasia, as we all know, is the franchisor for Domino's Pizza in Turkey, Georgia and Azerbaijan, as well as Russia. But Russia is now out, so it's Turkey, Georgia and Azerbaijan itself. We already hold about 48.8% stake in the company. So with acquisition of this 51%, it becomes a wholly owned subsidiary. And as a result of which, these numbers will start reflecting in Jubilant Foods' consolidated numbers as well. Remember, it was in 2021 where Jubilant Foodworks first bought stake about 33% for 251 odd crores. And in line with the growth in the business, the valuations have doubled as well. What this basically does is the reported numbers of Jubilant Foodworks consolidated results will now increase by around 13 to 15 odd % on the top line and EBITDA. And how are they going to fund this? Well, Jubilant Foodworks in India does have some cash on their books, but they are, incorporating a subsidiary in Netherlands, which will then take a loan, which will be provided for as a guarantee by Jubilant Foodworks in India itself. So net, there would be consolidated debt on their books itself. What does DP Eurasia have? They have almost 700 stores in Turkey, 10 in Azerbaijan and 6 in Georgia. And in the first half of this year, they did revenues of close to 456 crores with margins of around 17% and net profit of 66 odd crores. So 13 to 15% jump in the consolidated results, revenue as well as EBITDA.
Oh, that's pretty interesting. So revenue straight away, 450 crores comes in the consolidated numbers. That's interesting. Mangalam, thank you so much for that. Sorry, I missed the debt part. Do we have the figure? By how much does the consolidated debt go up by? Well, the revenue increases straight away, as you said, 450 crores.
Well, currently it's a net cash company. They don't have any debt, but just to fund this acquisition, they will be taking debt. It will be short-term and long-term. My sense is more of it would be short-term. So whatever debt there is will be exhausted in about a year or so. So not a big balance sheet problem.
Okay, sounds good then. Thank you so much. Prashant, interesting. Turkey, I thought it was always about doner kebabs and stuff like that. Apparently, pizza is popular there as well. Domino's works everywhere. All right, let's take this up with our first guest on the show. Raymond is with us. Raymond, since this has just happened, just wanted to toss this to you, whether you have a view on Jubilant. They've been doing so much in markets in India and overseas as well, right? Trying to expand the offering base itself. What do you think of it?
I think considering that they had already made a purchase in the past and possibly consolidating it, let's not forget DP Eurasia is one of the biggest players as far as the Turkey market goes, having presence in some other markets. Appreciated. Cost-wise, the acquisition cost, the amount that they are paying in, on the surface doesn't look expensive. They are saying they're going to fund it by debt, everything fine. But if you look at Jubilant Foodworks, I think even if one expects the consolidated revenue to go up, the interest cost is certainly also going to go up because of the debt, number one. Number two, the recent results, honestly, were disappointing to say the least. Not that I was expecting too much from Jubilant Foodworks, but the numbers were bad, if you ask me. The margin was under pressure, the profits came down. Now, giving marks to the management, I'm quite sure they will take necessary steps to improve everything. But even if one assumes that things will stabilize and possibly improve going ahead, though margins could remain under pressure for at least 1 or 2 more quarters, what is the stock going at? Around 60, 65 times FY25 earnings. Do you really buy a stock at that valuation in this market? And let's not forget, Surbi, we have the market. Market men have been a victim of many expensive stocks in terms of valuations. There are quite a few stocks which were expensive. People liked it just because the stock corrected. People went and bought it without realizing the stock still remained expensive. I would say Jubilant Foodworks is one of those stocks. Despite the fact that the stock price has not done too many things, I think at the present level, it doesn't command too much of attention, at least from the buying side, because the upside, if any, would be very limited according to me, because at 60, 65 times in the present scenario in which elections, then central elections, the market could be very volatile. Why should I possibly go ahead, stick my neck out and recommend a Jubilant Foodworks? So I would possibly like to stay away with it only because the valuation, according to me, is still very expensive.
Noted your view, Raymond, on that one. Well, guys, just want to point out one thing on the Nifty. The Nifty has hit the highest levels we have seen since September 20th. In the last 10 days or so, we have gone twice to 19,875. We briefly went above that level. We went to above 19,880. And with that move, it's the highest level that we have seen since 20th of September. So, you know, a 2-month high, a little more than a 2-month high is what we're seeing on the Nifty. Just want to alert our viewers on that.
Okay, so yeah, 19,875 is the level that we've been putting out as an important resistance for the last, I think, 2 weeks or so. So far, it's not been possible for the market to close above it. Will today be that day? The thing is, the Nifty, unlike the Nifty Bank has still got to go through the motions of getting through all the retracements, etc. The Nifty is already there. I mean, it just needs some momentum and a few percentage points, and you're basically looking at, the all-time high levels. There's nothing between now where we are and, the previous highs that we made. Raymond, just coming to you, but let's set this up. Oil marketing companies, IOC, HP, BP are having a fantastic November. The gains have become even sharper with more and more from the street joining in. HSBC is the latest with a positive view. Nimish is joining in with the details of what they're saying. Nimish.
Hi, Prashant. As you rightly pointed out, a big move in all the OMC stocks and largely on back of a big upgrade coming from HSBC. So today HSBC has upgraded all the 3 OMC stocks to buy from hold, and they've sharply raised the target price as well as the earnings estimates. Now, coming to the target price first, for BPCL, HSBC raised the target price now to 555 versus 340 earlier. For BPCL, they have a new target price which is 375 versus earlier target price of 215. And on IOC, they've raised the target price to 130 versus 80 earlier. Now, the key reasons why HSBC upgraded these stocks. One, of course, for the first half of FY24, the performance of all the OMCs have improved their cash levels. And that has actually mean that's driven the book value as well. So that's the first key reason why they've upgraded. Second, they see decent marketing margins to continue for most of the OMCs, and the support from the government is likely to get extended. So which means no interferences as far as the domestic fuel prices are concerned. So that's going to be a big positive for the OMCs going forward. So on back of all this, they've raised the earnings estimate for FY24 and FY25. For IOC, HSBC has raised the earnings estimates by almost 58%. For HPCL, they've raised the earnings by 48%, and for BPCL, which is the highest in terms of the street, they've raised the earnings estimate by 76%. So big earnings upgrade, and on back of the continuity in terms of performance to continue in terms of earnings, big upgrade on the stock prices as well. So all three are now upgrade to buy, and sharp increase in the target price as well.
Okay, all right. Thanks a lot for that, Nimesh. Clearly, big impact on all of those stocks. Merbon, wanted your view. How do you approach them?
I think if one looks at oil itself, I think despite the geopolitical problems happening right now in the Middle East, Russia, Ukraine, what had happened already, nobody talks about it. I think there has been no excitement as far as the oil prices goes. I think if you had asked 10 out of 10 people just about a month and a half or 2 months ago as to where do you see oil going, and everybody would have said it's going up. But somewhere, oil has remained in this present range for quite some time. So nobody talks of the geopolitical problem mainly because of that, because that is something which is going to affect all of us. Now, with oil at the present level, it's obvious that the marketing margins of oil marketing companies are improving. The numbers, I think Nimesh rightly mentioned, the performance was robust, to say the least, as far as the first half of 2023-24 goes. Now, HPCL, PPCL, IOC, which of the three looks the best? I would say when you are buying an oil marketing company, it has always to be from a trading angle. That's my personal view, and I've seen it over the years. Predicting what is going to happen as far as refining margins goes going ahead is a very tall task, if you ask me. So I still remain positive on oil from a longer term angle, but since we are discussing oil marketing companies, I would say that global refining net capacity additions are trailing the oil demand. So I also expect the refining margins to improve going ahead. So what does one do with stocks like HPCL, PPCL, IOC, which have already notched decent gains in the recent past? I think the obvious answer would be still go and buy from a trade angle. And which of the three is the best bet, if you ask me? My personal view is Indian Oil Corporation, IOC. With clear disclosure, I'm holding that stock. I think the company has been clear that it is setting up or commissioning its refining capacities further in the three plants of Panipat, Gujarat and Baramati. Now, with all these things happening over the next 1.5, 2 years, this capacity is going to go up. And with refining margins expected to pick up a little bit from here further, and marketing margins being good, as Nimesh rightly mentioned, with elections coming 4-5 months away, I think not much is going to happen as far as marketing margins go. It should remain on the higher side. So I personally believe there's at least a 5 to 15% upside in all the three stocks in the near future, personal view. And of the three, I would go with IOC.
Okay, IOC would be your pick, and we've noted the disclosures. Mehrabun, finally, before we let you go today, slightly different kind of a conversation, and we'll take this up with some of the, shareholder advisory, proxy advisors and advisory service firms as well in a bit. I want to get to Raymond and just get your sense on things purely from a stock market perspective. The stock of late has started taking cognizance of everything that's happening, all the news that's out in the media, and the fact that the board has been silent. How do you view the company? I mean, how do you view the stock X of all the events that have transpired? And how do you view it given the new context? Do you see this overhang continuing? And what would you advise someone on Raymond if they are a shareholder now?
See, I've seen a very sharp up move in the Raymond stock over the last 15-18 months. And this out of the board incident which has happened, out of the company thing which has happened between the husband and wife right now, I think the stock has taken a big beating. From that angle, should one go and buy into it? I personally believe that if you are a trader who wanted to buy the stock at 20-25% higher, who's getting an opportunity, you may go and buy. But again, the point over here is that what is the structure of Raymond as a company right now? And I've never been a great fan of this company or of the stock also. And I have, it's not the grapes are sour, I missed them a bust or nothing like that. I'm still not interested in buying the particular stock, honestly. But from a trading angle, it would possibly be a little bit prudent on somebody's part if he is ready to play for a 5, 10, 15% upside after the sharp fall with the stock has experienced over the last 15 days. It's the real estate story, it's the demerger of the lifestyle business, it's the expansion of the manufacturing part as far as Raymond goes. A lot of corporate things could happen in Raymond going ahead, and who am I to predict right now as to what exactly will happen over the next few months. So considering the uncertainty which I'm having, and the stock is not cheap by any standard. Yes, the stock price has come down by 20-25% and can provide a trading opportunity. But the stock is not cheap, that you just go and buy it and you're going to make money. So I would allow Raymond to be given a pass from my side, despite stating that from a trading angle, after the sharp fall for non-corporate reasons, I think the stock could provide a decent buying opportunity from a trading angle for people who are ready to put their money in.
All right, Raymond, we'll leave it there. Good conversation as always. Thank you very much for joining us with that perspective. You know, we'll take forward that conversation on Raymond. Proxy advisory firm IIAS has written an open letter to the independent directors of the Raymond board asking them to act. So we'll have Hetal Dalal, who is, of course, president and CIO of IIAS on the other side to talk to us about this. Stay with us. Okay, welcome back. You know, the market's doing just fine, 80 points, 19,876 is where we are at. It's just great going. But for one name, it's not so great going. I'm talking about Raymond, which continues to be under pressure even today. I mean, I think from highs of about 1900 recently, the stock's now under 1600 rupees. Although from the day's low today, it's come up a little bit. Now, Institutional Investor Advisory Services has written an open letter to the independent directors of the Raymond board asking them to undertake an investigation into the allegations, on both counts, the sort of alleged assault and the CEO excesses, as has been claimed. To discuss this in some greater detail, we are joined by Hetal Dalal, President and COO at the firm IIAS. Hetal, great to have you with us here. Thank you very much for your time. So tell us the crux of what you're telling the independent directors to do here.
So thank you for inviting me, Prashant. I think the independent directors have been silent so far. There is an impact on stock price. I think what we're only saying is that the independent directors need to act. Now, given that they are silent, we really don't know what has transpired in the boardroom. But we do know that there have been a couple of board meetings after the alleged incidents of the domestic violence. So have they really sort of discussed this? Has there been any action? We really don't know because the board has been silent. So given their silence, what we're suggesting simply is that the board undertake an independent investigation. They hire a firm which is not associated with the family or associated with the Raymond group of companies, a firm which is largely independent, who will undertake an investigation and ascertain the facts. Is there any merit in the argument for domestic violence? Is there any merit in the argument of the fact or the allegation that company funds are being used for personal benefits, which we sort of call the CEO excesses, and based on that sort of take action. Now, typically when a company would run an investigation, the investigation will come out with a set of facts, right? The investigation is not going to come out with a set of recommendations. That is for the board to sort of figure out. So we're saying essentially once the facts come into place, the questions the board needs to ask, there are some 5 questions, right? One is to say, is there a violation of code of conduct by either party, including but not limited to sort of moral turpitude? Second is there a possibility of criminal liabilities being attached to the company or any of its directors? Third is, if this incident does indeed happen, right, can the brand be disassociated from this whole event? Given that the tagline, of course, is the complete plan. Again, like I said, if you look at the responsibilities of the audit committee, whistleblower complaints are supposed to go to the audit committee. Now, if you have a board who's alleging that she is whistleblowing, board member who's alleging that she is whistleblowing or has become a whistleblower of sorts, then essentially there is a responsibility of the board to actually examine whether there is merit in this entire allegation of CEO excesses. And if there is, then how do they sort of stop further leakages? What is the kind of plugs that they actually put in place? And most importantly, again, is that this whole sort of impending divorce which is coming in, right? That's going to be a distraction for the CEO. So in the interim, we recommend that the board actually appoint an interim CEO, get both promoters, Gautam Singhania and Nawaz Singhania, take some time off from their board responsibilities, so they're able to sort of separate the company, its operations, from the battle which is happening between the two and the allegations which are cross-firing, and therefore sort of ensure that the company gets protected, if nothing else, or safeguarded from these allegations. So that's broadly the point.
So, Hetal, if I could sort of come in over here, now maybe a lot of what you're saying, in an ideal world, perhaps that's how things ought to be done. But given that here the person in question is, part of the promoter establishment itself, I mean, wouldn't that complicate things? And B, perhaps a counter argument, just to play devil's advocate, I mean, a counter argument from the other side could be that should an independent inquiry be held into matters which may be of civil or criminal sort of nature, because there could be police involved, the courts involved, so should a separate inquiry board be set up at all? And even if it is, then that board will take its own time, or that committee will take its own time to come up with its own observations. So then what happens in the interim? Just, give us a sense going by past. I don't know, I can't remember where a promoter CEO was actually removed by the board till, matters settled in such a case.
Fair enough. It's not an easy solution. I think it is now the role of the independent directors to separate ownership and management. Yes, the fact that Gautam Singhania is a promoter and does complicate matters, I don't take away from that. But we're not suggesting that that we've actually come to a conclusion, right? All we are saying is to separate and identify what the problem is and therefore address it. At the very least, therefore, you can always ask them to take a step back and say that let's sort of get the facts right and let's figure out how much of it impacts the company, how much of it is actually personal, and therefore a battle between the two which the company doesn't need to get involved in, and then take that action forward, right? At this stage, the board has said nothing, so we don't know what has happened. Now, if you look at research, right, and there is research which says there was a research, the paper which has been put out by Stanford, which says that in the US, right, where CEOs undertook, well, not strictly illegal activities, but legal, but not necessarily in the best of sort of context. What did the board do? In 50% of these times, the board actually undertook an investigation separately, right? You look at SEC regulations, right, where you have whistleblower coming in. There is a need to run an independent investigation. So, running an investigation is part of a course to just objectively understand what are the challenges, how much of the company get involved, and how much of the company actually leave out. So I think this is something that the board really does need to do. Are there past instances of the board asking promoters to step down? I think the times have changed, right? The topic on corporate governance and CEO behavior has become far more essential now. And while you do hear of CEO excesses in the past, I think the fact that there's an allegation of domestic violence, you don't hear that publicly often enough, right? So I think the allegations are serious. The board needs to take cognizance of the solution, and therefore, take some steps or some action to show that it is in control and addressing the allegations and nothing else. It may well turn out that after the allegation, they're saying all of this doesn't really sort of stack up, or even if it stacks up, it's not the company's problem. That is a separate argument to make. Let's just first ascertain what the issues are, and let's take some action to assuage the concerns of the investors. So I think that would be the one way to look at it. I'll stop there.
Hetal, just one sort of question. Does the board only get involved because it may hurt the prospects of the company? I mean, all these allegations and what they imply, or just given the fact that these allegations are serious in nature. I mean, we all talk about ESG, and this, I'm assuming, falls somewhere within the purview of that, right? I mean, independently of whether or not it hurts. I mean, if these allegations turn out to be true, isn't it the board's responsibility to take note of these?
If the allegations turn out to be true, yes, it is important that the board takes cognizance of it, right? You have to, in the context of ESG or even otherwise, you need to question whether, assuming that these allegations are true, this is the tone you want to set at the top. And if this is the tone you want to set at the top, what does it mean for corporate culture? And once you set corporate culture, that sort of drives more or less every action that you take. So yes, it is in the interest of the board to get these facts together, figure out whether there is any reality. I think dismissing it simply saying that...
Yeah, I think in that note you also say, even if tomorrow both parties decide to settle the matter, but the fact is that it would still be incumbent on the board to get to the bottom of this, right?
Yes, I think if it turns out that the allegations are true of domestic violence or CEO excesses or both, I think it's not action that board should allow to be condoned, right? Our view, the view, of course, is that, as I said, that is this the tone you want to set at the top? And again, if you separate ownership from management, the question you have to ask is, can this company also be run by a professional? I mean, if you look at the entire articulation in the annual report, they have leadership depth, they have people with industry experience, they have a succession planning in place. So therefore, board also needs to ask that is this allegation, is this battle something that they need to continue with, or is it time that they can find a stop or put a stop to it and at least protect the company from this whole issue?
Sure. Thanks for the views there, Hetal. I think we will keep talking about this, keep getting your thoughts on the matter as this story unfolds, because clearly, I mean, this is perhaps just the beginning till we hear more from the board. We see what Mr. Singhania has to say, if at all, if he's going to be willing to step down, or will he resist if this comes up at the board level. Thank you very much for your thoughts on the subject today. Well, with that, let's come back to the market. And the market's looking just better and better. 70 points up on the Nifty. It's turned out to be a nice little rally, really. And the mid-cap index is up a full 0.5% as well.
Just 1 point on the Nifty Bank. You know, it's actually it's lost its way a little bit because it had moved up.
Yeah.
But that came off the high point of the yesterday, and that's what put some pressure on the Nifty as well. Otherwise, the Nifty was on its way to approach high level. Just take a look at that. From the highs in the last 20-30 minutes or so, the Nifty Bank has slipped a little bit.
A little bit of a wobbly child this one has been. But let's take the conversation forward. Back to markets full throttle.
So there is 1 minute. Do we have the disclosure for Hital Dalal? If we do, I just want to quickly ask our producers to pull that up I mean, you know, have that. Yeah, there you go. You know, in terms of sort of shares held, I mean, there is a yes. So for the purpose of full disclosure, I mean, just wanted to put this up. And of course, IAS was very keen that we put this up during the course of the discussion. So that's exactly what we're doing before we move on. So that's analyst disclosure for the discussion that we just had with Hital Dalal of IIAS. So
okay, all right. So let's move on then. We have Raj Mehta, the fund manager at PPFA's mutual fund, who joins us on the show. Hi, Raj. Good afternoon and good to see you, and thanks for waiting by. Well, Raj, you know, I was looking at your portfolio construct, and you know, you have played this theme in terms of stock exchanges, financialization theme, and the entire equity cult, so to say, because you have CDSL in there, you have IEX, you have MCX as well. How much of this has played out, you know, because some of these stocks have re-rated big time. It appears there's a full reset in PE and its valuations as well. What's your take?
Sure. So as you said, the financialization of savings theme has just started in India, and there is a long way to go from here on as well. So from the time we have bought, surely the valuations have moved up. But sometimes you just need to hold on, have patience, even if the valuations have gone up, because it's not easy to exit and re-enter these stocks. So we have been holding on to them. And apart from the stocks that you mentioned, we also hold a stockbroker in there. We also hold a AMC. So trying to play it out through different routes and having diversification within the theme as well.
Got it. But, you know, Raj, you all bought in early. And as you said, you know, obviously good times for you as well as for the fund. But you won't add at these levels.
No, we haven't been adding to it for a long time now. So, in fact, most of the companies, we are at our limits, regulatory limits, which is about 5% shareholding. So, most of these depositories and stock exchanges have regulations where you cannot own more than 5% in these companies. So, I think for most of them, we are at about 5% in the company.
You know, MCX is up 30% this month. You know, it's up. Today it is up. It's got to the triple-digit gain mark, 100%.
Yeah,
100.95%. The big story with MCX, of course, is the not so recently, but fairly recently introduced options on commodities, and even within options, you know, the story which has not been kind of discussed too much is the fact that with about 15 months behind with options being introduced in commodities, volumes traded, daily volumes traded have now reached, average daily turnover has reached about 1 lakh crores. And of course, the bet is that, like what we've seen in equities, options now constitute about 90-95% of the total F&O segment. Futures is very small, and something similar will play out here as well. So that's the bet that many are making with MCX. Raj, am I correct in the ballpark broadly with MCX? Would you like to explain?
Yeah, sure. So options is one of the triggers for this stock in the last 6 months. A couple of other triggers are that there has been volatility in crude and other commodities as well, which sometimes helps grow volumes for these exchanges. And the third being the technology platform shift that they have made. So this had been in the news for a good couple of years, and it got delayed for some or the other reason. So now they have moved from a variable cost model with 63 moons to a fixed cost model with TCS. So what this does is, once the volume grows and the revenues grow, the technology costs would not grow in tandem with that, and that would bring some sort of operating leverage for the company and help increase margins.
Okay, so that explains the interest in a lot of these market infrastructure institutions, the exchanges, the depositories, etc. Rajai, good afternoon. I was noticing, I mean, cash levels from September have gone down by, I think, just about 1% or so, just around ballpark. Though I didn't notice any major changes in your top holdings, the top 10 or 15 stocks, they remain pretty much the same. Anything different, anything new that you've bought, or is it just adding incremental weights in your current positions?
We haven't added any new company. It's been more of additions to the existing stocks. Also, partly the cash would have reduced because the markets have gone up. So as a percentage, the cash comes down. But absolute levels, I would say more or less we have been sitting at about 15% cash for more than 12 months now.
Okay, so I mean, tell us the thought process. We're close to 20,000. You've not been adding anything new in the last couple of months. What's the reason? Is it valuation, or is it that the themes that interest you are already looking too expensive, or are you just being a little cautious and sticking to the current holdings?
So our position has always been that we don't hold on to cash just because the markets are at an all-time high or the valuations look high. It's more of a bottoms-up stock picking philosophy that we have, and as and when we find attractive opportunities, we are fine with deploying. So say tomorrow, if we find a good company, 5% of this cash will go away and the cash will come down from 15% to 10%. So always looking for attractive opportunities. As and when we find one, we'll deploy it. If not, then willing to sit on cash as well for a longer period of time.
You know, Raj, I was looking at Animal, which releases later this week, and I believe the collections are quite good, you know, the pre-booking that we've heard about. But the lead up to that question is, what about Hrithik, the H of the Hrithik, HDFC Bank? It doesn't seem to be doing that move, you know, that everyone's been waiting for. Do you think 2024 is the year when, in fact, you know, some of these large private sector banks that actually haven't performed, they come and they perform? It won't only be good for them or for their shareholders, but it'll be good for the index, because there's a large part of the index that's underperforming. HDFC Bank, your take?
That's correct, Nigel. So HDFC Bank has not performed for the past 3 years since COVID. We have seen relatively it has underperformed the markets, and at the same time other private sector banks as well. But if you look at the fundamentals, we have seen improving fundamentals for all these top private sector banks, be it NIMs, credit costs, or in fact credit growth as well. The longer term trend of market share shifting away from PSU banks to private banks continues to go on, and it will continue in the future as well. So I think private sector banks is a top bet right now, and it's a top sector in our portfolio as well, and we are very positive on this.
Raj, you'll add HDFC Bank at these levels?
Yes, we have been adding almost every month. We have been adding to HDFC Bank.
Okay, hopefully Hrithik dances then finally, you know, for good of your portfolio, good of the shareholders, and good of the index as well. Always good speaking to you, Raj. Thanks so much for joining and discussing, you know, all those themes with us and a couple of your portfolio bets as well. For the time being, you know, we'll slip in a short break, but I think before that, just pull up the Nifty Bank and the Nifty Financial Services Index. When we're having that chat with Raj, we have the Nifty Financial Services Index where the expiry will play out, and I think that saw a bit of a drop in the last few minutes. So Nifty Financial Services Index could come up for you. That's the Nifty Bank. I think the Financial Services Index had a bit of an intraday dip that got bought into. So that comes out to you. In fact, now that dip that got, you know, that we saw has got bought into. So that's moving up yet again. Well, time to slip in a short break. On the other side, Nimesh is waiting for us. He's going to tell us what he's picking up in terms of D-Street action. Welcome back. Well, the financial services index has moved to the high point of the day, and as we speak, the Nifty as well making a dash towards 19,900 odd. It appears, that the financial services index is playing out expiry, and that's what's helping the Nifty as well move to the high point of the day. But it's that time of the day when we tell you what's going on D Street Chatter. Nimesh joins us to tell us what is he picking up. Well, Nimesh, as we speak, markets at the high point of the day. Is it flow driven, or do you think it has an element of expiry out there?
Looks like, Nigel, there is an element of expiry as well, because the flows are pretty much mixed is what I understand. Of course, the markets are at day's high, but in fact, there's going to be a small market at close, sell flows as well in some select large cap names. So maybe some stocks will react to that. But as I said, it's pretty much mixed from the larger institutions. The bigger theme is the broader markets. Look at how the Adani Group stocks have reacted to the Friday's, Supreme Court observation. So big move on those stocks. And the bigger theme seems to be the PSUs. A lot of PSU stocks are buzzing again in today's trade. I spoke about the HSBC note on the OMC, so those are buzzing. But even apart from the energy stocks, a lot of the power PSUs are well bid is what I understand. So the PSU index is up another 1.5% at record highs. But again, the momentum seems to be largely with the broader markets and the PSUs. But to your point on whether it's expiry driven, looks like it's more of an expiry driven because the flows are mixed.
Okay, 19,900 here on the charts as we speak. Nimesh, what about individual stocks? What are you picking up?
Well, Nigel, as I said, there is a lot of momentum in the broader market. So a lot of my charter listed is part of the broader market. So the first name is Navkar Corp. That stock is buzzing in trade, huge volumes, and is up 12-13% in today's trade. I guess the street is now sensing some sort of a corporate development very soon. So that's keeping the stock excited. The second stock is Bharat Dynamics. Within the PSU basket, this is one stock where for the last couple of days there is delivery-based buying happening. So is the case today as well, and I understand a couple of domestic mutual funds are quite active buyers in Bharat Dynamics. The third stock is Landmark Cars. Been consolidating in a very narrow range in the last few days, but again there the delivery is marked higher. I understand one of the long only funds seems to be a large seller. That looks like the selling is going to get over very soon, so that's something to track in Landmark Cars. And the last one is Coforge. In a good market, that stock is under pressure today. As I said, there is small market at close, so Coforge stands out in terms of selling pressure. There is MOC sell flow at a leading FI desk in Coforge, and hence that stock is under pressure today.
Okay, all right, Nimesh, thanks very much for that. So those are individual names which Nimesh is picking up some modern news flow around. Well, Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. Mitesh.
So I have a STBT on ITC. It's kind of slipping down today, so take a trade with the stop at 438 for targets of 430. And Titan is on the BTST buying side, which I recommend taking a BTST position with a stop just below levels of 34.30 and a target of 34.70.
Okay, got that. Mitesh, thank you very much. We will take a break on that note. Back with more in just a bit. We'll also have Jay Bala of Cash the Chaos joining in. Talk about how he's viewing the market and the momentum that we're seeing today. Welcome back. You're with us on Closing Bell, and the markets have taken a bit of a flight. The Bank Nifty can't make up its mind. It's a 133 up, it's down, it's up. But in general, the Nifty is having a pretty good show. That's thanks to the recovery that we've seen in IT stocks, some help coming in from Reliance and the likes. Jay Bala from Cash the Chaos is with us now. Jay, thanks for joining in. Good afternoon to you. So, I remember that over the last couple of weeks, you've had a slightly more positive sort of bent of mind towards the market. Looking at the momentum that's setting in now, the consolidation that we've been doing in this 19,700 to 850 zone, what's the sense?
Yeah, until just a couple of hours ago, the markets weren't making up its mind, but it's good that it's starting to perk up. But I would still see the possibility of an extreme short-term pullback, a likely path before the markets head to fresh all-time highs. But the overall picture is that the markets are heading for all-time highs, with banks and Reliance underperforming. So that's the large theme I'm working with at this point of time.
All right. Okay. Hi, Jay. Good afternoon. So markets headed to all-time highs, but what would change your view on the Nifty? When do you think? What's the lower level you're looking at out there? And the Nifty Bank, at least the last 3-4 sessions, has been showing signs that it wants to come back to life. What are the levels you're looking at on that one?
Yeah, that's right. See, the Nifty Bank has the possibility of going below the October low. That could be the reason I'm, seeing the markets pulling back in the short term. But that's not a necessary condition. But if the markets were to go up straight, that'll be okay. And even if the Nifty Bank doesn't go below the October low, that will also be okay. But the speed of the move is going to be pretty important for me. I think the markets are going to have a labored move to record highs, with just markets having one pullback. So, if to your question, if the markets were to make higher highs at a faster pace, then that will change things, and so that's the observation point. And given that the markets are in a holiday season, I expect the market to be a little bit sluggish.
Okay, let's talk about a couple of stocks then. Tata Power's having a bit of a powerful move, I think, today. They put out a disclosure on the exchanges as well. What are the levels you're looking out there?
Yeah, I think Tata Power is heading for all-time highs past the highs registered in 2022. A bare minimum of 299 is what I'm anticipating. It could go a little bit higher. The momentum is quite strong, and overall the energy sector is also very strong. So it's a pick from that space, and a stop about 255. I don't expect the pullback, anything that comes through in Tata Power to drop to 255. So that's a good stop there.
Okay. What else is on your list, Jay? Good afternoon. In terms of tradable stuff.
Hi, Prashant. The metal sector is looking quite positive. I think the metal sector is headed for 3,400 to 3,500. And, auto is also positive. I've been positive on it for a few weeks now. And once again, there, two-wheelers are better than 3 and 4-wheelers. But today, Tata Motors is also firing, so that's a good thing for the sector. I think metals and auto have at least one higher highs coming through. I would expect the Nifty auto to scale somewhere close to 17,600. And also, reality is also firing. And, we've spoken about it in September. I said, watch the 740 zone. If that were to get crossed for the Nifty Reality Index, I think it's going for a much higher level. And it's doing that. So, the next resistance for the Nifty Reality Index comes at about 760. So, within that space, Oberoi is better than DLF, and that's better than Godrej Properties.
I was just taking a look at the moves this month. We're also rounding up November. For the month of November, we're looking at about a 4% gain on the Nifty, 8% gain on the mid-cap index, and a little more than that on the small-cap index. And it's been really all about the sectors that Jay was talking about. Real estate has been the best performing with a 17% up move. So, Jay, that's the question. Do you just stick to where one already sees strength, like you mentioned, autos and real estate, or should you look at something different? For instance, IT has been kind of in the middle. Not a very clear trend, but then you get the odd buying days. Banks are constant underperformers. Even PSU banks, actually. November has not been a great month for even PSU banks. Should you look at the underdogs at all, or just stick to buying strength?
Yeah, I mean, the broader theme is that you got to play for the short term. But so what you choose to play is up to the individual style. Yeah, I pointed to Nifty IT as having potential to cross 34,000, maybe even on a stretch to even 36,000. So there are some pockets there. So within that space, the front line, large caps, it's TCS that's the best pick there. Infi is relatively underperforming TCS. So you can look at IT, but it's just a short-term play. To me, from a larger degree, say from the Jan 2022 high, this is still a counter-trend move for the Nifty IT sector, but it's still got short-term upside potential. And most of the, as I mentioned a few weeks back, the next all-time high the Nifty makes is probably going to be a significant top for the medium to long term. So we'll work that out once we are closer to the all-time highs, and when we cross the all-time highs, there's still time to work that out.
Sorry, you're saying the next high will be a significant medium-term top, Jay?
Medium to long-term top for Nifty, and the focus is now for the short term, and it's going to be pretty. I mean, even the global markets are likely to go towards all-time high or slightly modestly exceed it. So it's all in sync, but the next all-time high will be a very significant top for me.
Well, the high will be a significantly higher high from the previous one. The previous high was 2222. So the high is what's the projection?
I expect the next all-time high to be in the range of 20,600 to 21,100. So that's where I expect the medium-term top to get formed.
But like Jay is saying, right, we're entering December, Santa Claus rally. When we get to that second high, then we'll talk about the top.
No, but Jay, this being a little miserly in your forecast, huh? Because 2,600 is what? I mean, 2.5% away from where we are now.
That's right. I take whatever the market gives. It's not my misery. The market is being structure.
No, I'm just kidding. But point taken. You're saying that we'll see. Of course, it's step by step, and we'll sort of cross that bridge when we come to it. Jay, thank you very much for joining us. It's great conversation as always. Appreciate you joining in with that perspective. 19,900 plus on the Nifty. So when we started this morning, it was very quiet. Global markets, especially overnight handoff from Wall Street. No big price jumps, no big cues, etc. Europe right now, for example, as we speak, is largely lower. It's done a little, I mean, Asia did a little better, but the market here is done very, very well. So 115 points higher, although I have to say, market breadth is very, very close. I mean, 1,300 stocks higher and about 1,200 stocks are lower. So, about 100 stocks separating gainers and losers. So that's the overall picture. Even as mid-cap index and small-cap indices gain a third and 0.5% or so, respectively, up on your screen right now. Surabhi.
For me, just two clear sort of pockets that stood out today. One is PSU, and count in the oil marketing firms as part of that. Of course, they had a separate trigger given the positive brokerage commentary, but PSUs in general, NBCC, NMDC Steel, PNB, SJV, and Coal India, ONGC, BHEL. Look at the price and volume charts on the on our screens, and it's largely all PSU stocks. The other is the Adani Group, because whether you're looking at Adani Power, Total Gas, Wilmar, Enterprises, any of the Adani Group stocks, massive gains there.
Well, I'm just looking at two factors that played out today, the IT index as well as the Nifty Bank. It's like the India team in the late 1990s when I used to watch cricket. Azharuddin and Tendulkar on a foreign pitch, only both of them used to score, and that was good enough. When they did very, very well. So both those two did well, both the pillars of the market. And in fact, that's the reason why we go home with gains of more than 100 points or thereabouts. But we'll wrap up on this edition of Closing Bell, but you don't go anywhere. Our new offering, Markets Forward, comes up next.